Alright, how we doing, boys? Thought I'd make this video just to kind of, because I'm actually starting to get a few more views, even though the views are stupidly low. I want to make this video to kind of give you guys more of an understanding on how I enter these markets, because I'm posting trade recaps every day, and I feel like after you watch this video, you'll understand these trade recaps a lot more. Maybe you're struggling with a model yourself. And yeah, this way of trading is exactly how I look to enter the markets every day. There's obviously a few different entry models I have to execute in certain scenarios, but this is my favorite entry model. This is the most probable, and I look for this every single day. So let's get into it. Now, here's the framework. 3 simple things. All you need. High time frame draw on liquidity, delivery out of a high time frame or middle time frame fair value gap, and the entry model itself, SMT, inversion fair value gap, and a change in the state of delivery. Alright, that's all you need. Obviously, there's a couple of other things you need to abide the rules by, and that's obviously trading in probable conditions where market isn't chopping, trading in a certain time window, being the AM session, which is 9:30 to 11 AM, or I trade to 11:10 AM, just so I can trade that macro 10:50, 11:10, or the PM, which I trade 1:30 to 3:45. I only trade the PM if I'm not around for the AM session. So if you yourself can trade the AM session, avoid the PM, alright, because the PM is less probable, you're more likely to get chopped up. But I've got to do what I got to do because these are the cards I've been dealt with, time frames in the UK, and the job I have. So this is all you need. So let me draw this out for you on what I like to see. So let's say the 4-hour chart, we're buying up, alright, we're in this buy model, we're delivering out of a 4-hour PD array here, and then we get like a 15-minute market structure shift. Okay, and then we pull back to a 15-minute fair value gap. Now this is the exact framework of a high probability setup. Now, a lot of people are just going to enter if they see like a tap into a fair value gap, an inversion, and then they end up getting stopped out and wonder why. Now, this is where SMTs come into play. This is going to save you a whole lot of not getting chopped up, and this is when you know that price is truly ready to go. So, we're going to wait for a resweep of the low and it to be manipulated with an SMT. Now what this does is that it filters out a lot of bad setups, and it's going to make you take less trades but more probable, higher win rate. So we've just pulled back to this fair value gap, the 15-minute fair value gap, and put in this SMT. This high would now be your 15-minute buy side liquidity because we're trading out of the 15-minute gap. Now all you need is an inversion fair value gap, and then let's say you're changing the state levels like here, for example. You're going to wait for a closure above the change in the state. Now I tend to just market execute as soon as the candle closes, but if it's way too far away, you wait for a pullback to the change in the state. Stops at the internal low. Target this 15-minute buy side liquidity, excuse me. If the risk to reward is too shit, then you're going to target the next draw, alright, or wherever you're happy on risk to reward. It could be a 1.5 or a 2, but 9 times out of 10, if the risk to reward is good to this draw, I'm trading that, and this is what you call the internal market maker buy model. Alright, so we pull back to the change of state, you get your entry, and then we start trading the 15-minute buy side liquidity being your target. If we have an internal high here, that's going to be a break-even point. That is the framework. Simple as that. Alright? This could be a 15-minute gap, it could be a 5-minute. If there's no 15, you're going to use a 5. Cut out the order blocks, just use fair value gaps. So when fair value gaps are getting created, that's when you know price is moving most efficient because it's leaving imbalances in the market. Alright? So that's the framework. Let's go through a real example. Alright, so we're looking at a 4-hour chart here. And 4-hour is typically my main time frame of getting bias. Obviously, I'm going to be flicking through the daily, the weekly, this and that. But 4-hour essentially gives me my framework for the day. So let's take a look at this, right? So we've just had a shift in structure. All right, our market structure shift. And we've pulled back to this 4 hour fair value gap. What can we see from here? Once again, this 4 hour holds. This is basically, after we get the shifting structure and we open up the gap, we're like, okay, cool. High time frame is in a sell model. What can we expect when we trade up into this 4 hour gap? We can expect price delivery back lower. Now, coming into the following day, the next candle is actually a PM session. We'll go over it anyways. So we're looking at Thursday, 25th of June for the PM session. Okay, you can go through your charts and see it for yourself. We have relative equal lows here. We're in a sell model. We've shifted structure. We've pulled back to a gap, and then we've displaced back lower, confirming the next draws on liquidity. So the next draw from a 4 hour standpoint would be this 4 hour sell side liquidity. Why? Because we've traded up into the 4 hour, leaving behind this low. That's our next draw. High time frame draw is this relative equal lows. We're not going to target that. That is way too far away. That's over 1,200 points away. This is just in the back of our mind to basically tell us, okay, at some point in the near future, we'd like to see this get hit. But we know intraday, our bias is bearish because look at this beautiful 4 hour structure. We're in a clear market maker sell model, right? So we come up. All right, we end up breaking structure, pulling back. We're in a sell model, all right? So let's zoom in now from the 4 hour to a 15-minute chart. Notice how when we trade into this 4 hour gap, we get our, I mean, you could use this, but this is our more prominent level. Market structure shift. Now, obviously, these conditions aren't exactly the best because we've already dumped this day, 900 handles, which is just ridiculous. But anyways, coming into 2 p.m., you can see we open up a new 4 hour. All right, let's just delete this for a sec. So, out of a 4 hour gap to basically confirm our moves lower, we need a 15-minute market structure shift. Where would that level be? For me, I'd be looking at this. All right. Even though this isn't the best example, this is literally just me zooming in to a random day. This is our market structure shift level. Okay. Let's zoom in to a 5-minute. Okay. Well, we have a 5-minute SIBI. Now, this is what I call the internal model. You can target this market structure shift level. Okay. Why is this market structure shift level? This is the last swing low that then proceeded to go up and take a high. Okay. We're targeting this. To see this low confirmed, we need that 15-minute market structure shift, pull back, we target that. For now, doesn't mean we're hands off. We can target this market structure shift level, and that's our only target, yeah? So we're looking for a middle time frame or high time frame gap to deliver from. In this case, we got a 5-minute. Zoom in. All right. Let's play price out. Okay, so we end up selling off. Now, is there an SMT in place? Let's go back. Let's cut back a candle to where we tap into this 5-minute. So ES actually hasn't taken this high yet. Should that high? Does it take it at all? No. Beautiful. So, textbook stuff. SMT. We've got a high time frame draw on liquidity. We're targeting the internal model in this case because we need the market structure shift level. This is our draw. This is where we expect price to come and shift structure to then confirm moves lower. For now, we just target this. So we got the SMT. Now what are we looking for? The inversion gap and the change in the state of delivery. There's no, I'd love it if there was a gap to inverse here, but there's not. Change in the state of delivery, last series of up close candles that manipulated or took highs would be here. Now we're looking for a gap to inverse. In this case, it's going to be these gaps here. Alright, so let's see what we get. Bang, inverse. Me, I'm short right there. Stops, short term high. Now, you could, this is where a bit of discretion comes in. So, a lot of times you're going to see a break even and it runs to TP. Now, it's up to you whether you do this or not. You're either going to go break even at this internal low. Obviously, the entry isn't the best down here in this case. All these trades are different. Sometimes you can have bad entries, sometimes you can have good. But this has a good win rate, trust me. Now, Me in this instance, I really like these relative equal lows down here. Alright, we have all these stacked lows. I'd be using this as a break-even point. Because a low, stack on top of low, low, low. This is waiting to get ran, right? So, in my case, I'm confident on the draw on liquidity. I want to see this market structure shift level. Now, I'd be treating this instance as a 2022 model. So, market structure shift. And allow a pullback to these 1 minute fair value gaps within here. To then send price back lower. There we go. Alright, we didn't even trade in to that 1 minute gap, but break even point met here. Stops to break even. Let's delete this just to keep the chart nice and clean. Jesus, this is chopped. Did ES end up taking the draw? ES took it over here. Okay, whatever. Okay. Would have been a break-even trade. Alright. But you get the point. This is the textbook entry that I would have liked to taken. So let's continue to go through price. In this instance, we didn't hit full TV. Unfortunate. I'm not one of them guys that are going to go through and find you an example that works straight away and it's going to be like, you know, you just see the winning trade. In this instance, it's a break-even trade and you're going to go through those. So let's cut back to another day. What looks pretty good. Okay, here. So in this instance, let's just say we have our high time frame, just so we can see what this model actually looks like cleanly, you know. We're on a 15-minute chart, right? Let's say our high time frame draw on liquidity is lower, and we've had our 15-minute market structure shift, and we pull back to this 15-minute inefficiency. All right. We take out all these internal stacked highs within here. Okay. We're in a 1 minute chart now from a 15-minute gap. Oh, look what we get. Inversion gap. Oh wait, we don't know if there's SMT here. Always watch for the SMTs. There isn't one in this instance, I don't think. Yeah, there is. Up here. Yeah. ES never takes this high, but yeah. Look what we get. Inversion gap. Again, who knows if this works out or not, but changing the state of delivery. Alright. What time is this? Okay, it's like not a time that you would trade, but still, you get the point, right? So we have the SMT because ES never took this high over here. SMT. High time frame draw lower. Trade into a 15-minute gap. We get, obviously this isn't the most efficient price because it's like, you know, Asia session. But inversion gap, changing the state of delivery. I'd be short off that candle closure there. Stops. Protected high. Where are we targeting? Well, let's see. So let's open up. In this instance, because this is such a huge... Oh, I'm saying that's not that bad actually. Well, we have the south side liquidity pool down here. All these stacked lows. What I like to do is mark out equilibrium of this entire range and look for a low or an inefficiency within that. So we have this nice low, back down discount. If the risk to reward is good enough, then I'm taking that. 2R. Smack quick. Alright, so that's the model. Simple as that. So yeah, that is my trading model, boys. That yields me around a 75 to 80% win rate. This last 2 weeks has been insane. I've been around like an 87 or 88% win rate. Absolutely ridiculous. But yeah, hopefully this has given you a bit of structure to your trading. And yeah, we'll see you in the next trade recaps. And yeah, hopefully we have another good week.